Hello, everyone, and welcome to the big show. This is Investing and Trading Live, sponsored by Trading Academy. If you're a first-time listener, thank you for stopping by. As always, I am your host, Josh Lilquist, and I have my good friend and my good pal. Yes, he is the one and the only. I think the one and the only, Mr. Al Connickson. How you doing today, Al?
You know what? I am feeling chipper. I think that's a word.
That's a new one today. I haven't heard chipper for a while.
That's
You got your Tommy Bahama
AKA
on?
feeling good. Yeah, I got my Tommy Bahamas on.
I think you're chipper because it's the holiday season.
Yeah, well, there's a little bit of that going on, but also a lot of pressure because that big day is coming up soon, and I am nowhere near being prepared.
Well, I know that you will go out on Christmas Eve,
That's
and
great.
you will get those presents because I know Santa Claus is coming, and you want to make sure that you're on the nice list.
Yeah, it's kind of a guy thing. We go out Christmas Eve, and then they double or triple the prices when they see us coming.
Exactly, yes. That's supply and demand at its finest right there. And that's what we'll talk about here today. Supply and demand in the financial markets. Since this is a financial show, that's what we're going to talk about. We're going to talk about stocks today, opportunities within them. As we know, things have kind of, depending on what you're looking at, slowed down a little bit. We'll discuss that here on the show today. And as we know, Santa Claus rally will be starting here soon, I believe. Al has the dates on that as far as when that starts
Right.
and when it ends. And it might be a little bit different time than you actually think. Then we will get into a market update and different opportunities with stock options, futures, and Forex, retirement accounts, and retail trading accounts. Our sponsor, Trading Academy, on their 28th year, teaching people just like you how to invest, how to trade, how to get started if you're brand new, or how to have more consistency if you're a seasoned veteran. So, Al, with this market update, as I mentioned, the title of the YouTube show, make sure to check out the YouTube. Just go to Josh Lilquist, by the way, and watch it live there. But the Dow Jones seems to be struggling a little bit.
It is.
And quite frankly, 1, 2, 3, 4, 5, 6, 7, past 7 or 8 trading days, we've seen some downside action and coming near a low of 43,000 at one point here, potentially. Obviously, we don't have a crystal ball. We don't know which way it'll continue, but we know that it's been struggling over the past couple of weeks here. You have the NASDAQ, which is actually doing the total opposite.
Right.
Hit an all-time high. I think it was on Monday again, and we know what happened Tuesday through the rest of the week. The S&P 500 right at all-time highs as well, but that one is consolidating a little bit around the 6,000 to 6,100 mark. So you're seeing a little confusion in the major markets there, the major indexes. So that is that. You have gold and silver that are they're a little bit struggling as well. They've been around the same price point here since really September, with some action to the upside and to the downside. But quite frankly, we'll call it sideways since September. Same thing with silver. Same time frame. Silver has been about sideways since September as well, right around the 30.5 mark, depending on when you're listening to the show. As we know, the show is played all across the world on the podcast, Investing and Trading Live, and all across the metro here in the metropolitan Minneapolis-St. Paul area. So, and we know this is a crazy one here, Al. Is Bitcoin just continuing to surge over 100 and we had 108,000 at one point, and wow, just surging to the upside, and a lot of reasons for that, and there's always opportunities with these markets, but you need to understand supply and demand, how the market works, but how to make smart decisions and minimize your risk in the financial markets. How are you helping people during this holiday season minimize their risk in the financial markets?
Well, it's not just during the holiday season. That's our goal all the time. If you are going to be an investor or trader, you really need to know how to manage risk. It's really what's important isn't necessarily how much you make, it's how much you keep.
Yeah.
And for a lot of people, we see people come in all the time, Josh, say, yeah, I had these great returns, fantastic returns. Well, that's good. You probably had a pretty good month then. No, actually, I ended up holding on to it too long and I lost it.
And that's an interesting comment, because when people think they actually made money if their account goes up, well, if they don't close it out, they haven't made any money there. It's just a revolving account.
Yeah, and the bottom line is that it basically was luck that they got in when they did and made that kind of return, but they didn't know how to manage their assets. And there's a number of different things that are part of being successful as a trader investor, and that's what we try to teach our students. You mentioned the word consistency a little while ago. That's really key. It's not hitting home runs. It's not going out and trying to, swing for the fence every time that you look at a trade or investment. It's learning how to do this in a way that you have consistency. And the only way you can do that is to use a strategy designed to do that. And sadly, Josh, we've got a country that is essentially financially illiterate. Ask yourself, those of you that are listening, who taught you how to trade or invest? Where did you get your information? Who taught you how to protect your assets? Who taught you how to grow your assets in a down market as well as an up market? What about a flat market? And who taught you how to, or how are you determining the rate of return you need to be able to achieve the goals and the dreams that you have? And it really comes down to one key important thing, and that's price. And what I mean by that is identifying the price of whatever you're looking at investing in, and identifying the price at which it is going to either turn in a different direction and go in your favor, or continuing to go in a direction that's in your favor. Price is the most important component. And unfortunately, for a lot of people that have advisors that kind of buy into the typical advisor advice, ignore price. If you go into a financial advisor with a whatever the amount of money is you have, they're going to say the important thing is just getting in the market. It's time in the market. And what we would argue, and we'll talk to you, we please come into these classes and let us explain to you why this is important. It is timing the market, timing your entries and your exits that is more important than time in the market.
And that's basically when to be in the market and when to be out. You don't have to be in when the market's going down. You're not required to just have that money disappear, but you're trained and conditioned to do so. I was actually teaching one of these investing classes yesterday that I'll be giving away seats to here in a second. We talked a lot about that conditioning. Had some great folks in there like, you know what, we've been told to go do this all the time. We've been told to go do that all the time. But then again, if everybody's doing that and the majority of the people struggle, well, there's probably something wrong with that. But you don't know unless you find out something different. Your gut feeling isn't always right, but quite frankly, your gut doesn't have a brain. And that was a comment from the students as well. Is, people invest and trade based off that gut feeling or their opinion, and that doesn't move the market. And I said, I would agree with you.
Right. Yeah, and you want to keep your brain out of it too. Some people's brains don't really even have a brain. I guess you could say.
This is a family show, Al. But I would agree on that end too. So that's why we have these trading and investing classes, these free trading and investing classes that we do all across the metro. These classes we have right here in Bloomington at our state-of-the-art facility here. Matter of fact, that's where we're doing our show here. And we also have these in Maple Grove, Edina, Woodbury, Wayzata. Come into a neighborhood near you to, as what Al was talking about earlier, increase that financial literacy. To come into one of these classes, just text the word investing to the number 210-210, and that's for 2 seats, one for you and a friend, or go to tradingacademy.com. That's tradingacademy.com. Al, we got a lot more to discuss here. We got more income strategies, wealth strategies. I do want to talk a little bit more about who taught you how to invest. This is Josh and Al, Investing and Trading Live. We will be right back. Okay, so we will continue live on the YouTube. Type any questions in if you have any. All right. What day is Saturday?
21st, maybe?
Today's what? 17?
I don't know. Yeah, today is 17th.
I think you're right. 21. It's almost Christmas time.
Getting close.
All right, segment 2. Let's talk a little bit more about who taught you how to trade and invest. Mm-hmm. We'll talk a little bit about the strategies that people are being told to get into, YouTube, all that crap that's out there, just so they understand why it doesn't work? If everybody's doing that stuff and the majority of the people struggle, why that doesn't work? Hopefully shed some light on that. All right, 14:50 on the clock. Here we go. Welcome back to Investing and Trading Live, sponsored by Trading Academy. Once again, I am your host, Josh Lilquist. On the last segment, covered some topics on, well, first off, supply and demand, where you got your knowledge, but how traders and investors are told to do certain things in the financial markets. You're told, really, quite frankly, to get 401ks. Go to get a good job first, obviously. Get a 401k and invest in that and buy and hold for the long term. And you're going to have billions of dollars when you retire. Well, if you're listening right now, we all know that's not happening for the majority of the people. So there must be a disconnect there. So we're going to continue that discussion here on this segment about what that disconnect is and what we can do as traders and investors to overcome that problem. Okay, because we can do this ourselves, you just haven't been taught. And we had a lot of people texting in for this free trading and investing class that we do right here at the Academy. This is a physical place to go. We're right here in Bloomington. We got a few different classrooms teaching people just like you how to invest and how to trade, how to get started if you're brand new, or how to have more consistency if you've been investing and trading for a long time. Text the word investing to the number 210 for 2 seats for a free trading and investing class. It's the holiday season. We're giving away 2 seats, one for you and a friend. Text the word investing to the number 210 for 2 seats, or go to tradingacademy.com. Also, we love our followers and subscribers. We're getting a lot of traction on this podcast. That's Investing and Trading Live, wherever you listen to your podcast, Apple Podcasts, iHeartRadio, and Spotify. We're going to make this the global #1 financial podcast on the financial markets. So, Al, we have, in the last segment, since we did bring that up a little bit about who taught you how to invest and trade, and if you got to think logically here now. And I want the listeners, if you're listening right now, just kind of turn your adult brain off for a second. And we always have to think, okay, what is logical? What's happening? And then why is that happening? What's a logical explanation for that? So as I mentioned a few minutes ago, we're told a certain thing from a young age. Go to school. Get good grades in high school, right? Go to college. Get good grades there and graduate. And then go to get a good job, a 9-to-5 job. That cubicle that everybody loves to do every 9 o'clock in the morning, and they clock out at 5. Quite frankly, it's probably a lot more hours now. You're going to get a 401k, and that's gonna fund your retirement, the golden years of your retirement. You're going to get a match, which I think is a good thing. Companies are doing good things and they're matching people's 401ks. And then by the time you get to 60, 65, you're going to have billions of dollars, and you're going to retire and live those golden years of your life. Well, if you're listening right now, and if you're at that age, you probably know that that's a fallacy, right? And you also know if you're not that age, you probably have spoken to somebody where that's not the case. Now, there's a lot of challenges with that. 401ks weren't intended originally to be a retirement account. It was a salary reduction program for high income earners back in the late 70s and early 80s.
Right.
So we'll talk about that here a little bit. But also, if it's not getting people to retire with the monies that they need to have a comfortable lifestyle at retirement, there's something wrong with that. And a lot of that is the funds you're being put into, but also always being in the market. And then, as Al was alluding to earlier, they're going to tell you it's time in the market. It's a common phrase they say. Sounds pretty cool if you ask me. If you don't know what you're talking, what it is. But if you're in all the time in up markets, great. But also in down markets, what has happened is your overall average price, because you're investing every other Friday, has completely increased. So when markets don't go up, when they go down, you take such a big loss, and that's devastating for retirement accounts. Al, I want you to discuss that and talk about those challenges, but really, most importantly, what can we do as people to overcome those challenges of not having enough at retirement time?
Well, the unfortunate thing, Josh, is that when you finally realize what the advice that you've been given doesn't work, it's too late.
Sometimes it is. Well,
Yeah, I mean,
it's never too late.
let me take that back.
It's never too late, Al.
It's never too late, but you finally realize what you shouldn't have done, and what we want to do is show you what you should do before you reach that point where you feel, I missed all these great opportunities, these years of great opportunities.
And basically what that means, if you don't know, it's really not your fault because you're conditioned to do that.
Yeah,
What is your fault is if you continue to do that once you know.
Yeah, and you have to take into consideration who you're getting advice from. Who is that person? Is it your parents? And where did they get their advice, and how successful are they? If you're taking advice from anyone, take advice from somebody that's more successful than you are. And how do you do that? How do you find those people? Well, that's one of the things that we do. We provide those people for you. We have instructors, people that will share their expertise with you and give you not only the knowledge, but help you build the skills to use the knowledge.
By the way, people that have been on the floors of the exchanges as floor traders, New York Stock Exchange, Chicago Mercantile Exchange, the Board of Options, but also clerks. So basically, they facilitated order flow for many, many years. That's who you want to learn from.
They live this market. And what Josh is talking about when he says facilitate order flow, these guys understand what drives price. Josh has mentioned the words supply and demand. Basically, in investing and trading, just look at demand as being buyers and supply as being sellers. If there are more buyers than sellers, price will go up. And if there's more sellers than buyers, price is going to go down. So how do you use that to your advantage? You have to be able to find where the buyers and where the sellers are to be successful. And you do that by learning how to read a price chart. There's all sorts of information out there. There's all sorts of, I call it fluff, all sorts of noise. You can listen to people on TV, you can read newsletters, you can go to the library and read books. There's always somebody that basically has an opinion. Now, the opinions are really just guesses. What you need to do is concentrate on what's factual. If you look at price, when you find price, everything is there. The good, the bad, the ugly is all reflected in price. So how do you use that to your advantage? You have to use a strategy that shows you the accurate price for you to be active in a position, whether you're buying or selling. And how do you do that? Well, what if I told you that there was somebody who this year, 2024, had 236 profitable trading days? Would you want to maybe know what they're doing and how they are so successful? That's pretty much every day. There's only 250 some trading days in a year.
Goldman Sachs?
That was Goldman Sachs.
It's a lucky guess, right?
Yeah, and why do I bring that up? Because Goldman Sachs, J.P. Morgan, Warren Buffett, hedge fund managers, these are the big players, the Wall Street smart money. And they're taking their positions based on information and knowledge that we just don't have. We just don't get it. We don't have billions of dollars to get research and data, and most of us don't have these high-speed, sophisticated pieces of equipment that they use. They understand more than we can understand based on what's available to us as a public. So they know what the true value of something is. They know because they're not going to put their money into something that they don't feel gives them a fantastic opportunity of being successful.
So what do we do then? Like, how do we, what do we need to do to overcome that problem?
Well, you can send a note to Goldman Sachs and say, would you please call me when you are getting ready to take a position?
I lost their email. I don't have that anymore.
Yeah. I tried it once and they never called me.
They never responded.
So here's what they do, though. They leave little clues for us. First of all, they can't take all of a position at one time because everybody would see that and they would never get all of their order filled. They don't just buy 20 or 30 shares of something. They may spend sometimes billions of dollars on one position, but they'll do it incrementally. So if you can identify when they're going to put their money to work, and basically you're looking forward, but if you can follow the clues that they leave, which we have incorporated into our core strategy, our investment strategy, you can be positioned. Because once their orders hit the market, and once these computerized trading systems hit, they have numbers that they're programmed to hit. As soon as a number is met, and then they will flood the market with orders. And that's what drives the price. You want to be positioned So you're already there. When that happens, your position is already set. And what if you're wrong? Because you're not going to be right all the time. So one of the key components for successful traders is managing their money, managing their capital. Every professional trader out there will tell you they never enter a trade unless they know what the downside is and they can control that as much as possible. That's another component of what we teach you. What's the other component of being successful? It's knowing how to identify and secure a profit. And that really, you really determine that by looking at where the buyers are and where the sellers are. What's the distance between the two of them? That's going to be your profit potential. A big mistake that most people make, and we see this all the time, Josh, is not knowing when to get out of a trade when they have a profit.
And that kind of goes back to what we talked about in that first segment. When people have these profits, if you don't realize them, it's right. Unrealized.
Yeah, and the problem there is that as human beings, we have this greed component to our emotional makeup. And when we see something going up, we're thinking, well, it is, as long as it's going up and making money for me, I'll just hold on to it. And before long, it rolls over. And as we always comment, the market or assets go down about 3 times faster than they go up. Sometimes it happens too fast for you to get out, so your profit can be just basically disappear right in front of your eyes.
And that's very similar to for those of you that did watch football this past weekend. There was a particular running back that had like a 60-yard run, and he got the ball, maybe a 50-yard run from the 50-yard line, running for a touchdown, wide open. He was right there, and he didn't realize his profit. What I mean by that is he actually dropped the football on purpose at the 1-yard line. So he didn't cross that finish line. He didn't finish what he was trying to accomplish, was score a touchdown. And that's the same thing when you don't realize profits. It all looks good, but if you don't cross that finish line and realize those profits and know how to keep that money, it really means nothing. Because that, in that case of the football guy, it meant nothing because I believe it went out of the end zone and it turned into a touchback. So they did not get any points. So that's what is so important in trading and investing, is you got to find those clues, as what Al was talking about. And once you understand where those clues are, it actually gives us an advantage. Because Al was explaining how the banks and institutions, they have the billions of dollars. But when they have billions of dollars, he was explaining that they can't get in and out of a position at the exact price point. It's not possible. You need sellers for buyers, buyers for sellers. So with that, it gives us an advantage because we can get in and out at a snap of a finger. We can buy our 100 shares, 1,000 shares, whatever that may be with stocks, and we just can't move the market. So it's like we're a needle in a haystack. But the problem is, if you don't know how to identify where are they buying, where are they selling, which is those clues, where you find that is on a price chart. And if you don't know how to follow that, that's where people struggle. And then what happens is you're just guessing in the markets. So Al, with that, what do you think if there was one component to identify where they could be buying in about 20 seconds, what would that component be? So what would you want to identify, or how would you identify where they're buying and selling? What would you look for?
You have to use a strategy that shows you how to identify, as we call the supply and demand zones, the zones where it's an area where institutions are buying, where you're increasing the odds of your being right significantly, but you're also decreasing the risk and you're increasing the profit potential. But it's identifying those zones. You have to have a strategy that does that, because think about it, the only thing that's really important is knowing when to buy a stock or an investment and when to sell it. And you have to have a strategy that shows you how to do that. We use those zones, supply and demand zones, to show you where the institutional activity is going to take place.
And that's the great thing about trading and investing, is you do not have to be at the exact right price. It's an area of interest, we'll call it. It's a zone. Right. And that comes along with having a strategy. And Al, I know we talk a lot about this in these trading and investing classes, these free ones that we're giving away seats to. So we're able to show you. If you're listening right now, obviously we can talk a little bit about here on the radio waves. But when you're coming into these trading and investing classes, since us as people, we're visual learners, it'll make a lot more sense. So you can see how that's illustrated. How when there's more buyers, price goes up. When there's more sellers, price goes down, based off a price chart. And the great thing is to be a trader, you do not need to be a professional. All you need to do is understand where are those professionals buying and selling, and then jump on their coattails. So to come into one of these free trading and investing classes, to go through what supply and demand is, how to have a strategy that increases your odds, just text the word investing to the number 210, 210. That's for 2 seats, one for you and a friend. Text investing to the number 210, 210, or go to tradingacademy.com and you can pick your own seats there. Al, we have a lot more to discuss. That was a good discussion on, retirement accounts, 401ks, things that are happening there. Let's continue up with some income strategies coming up next. This is Josh and Al, Investing and Trading Live. We will be right back.